All right, everybody. Welcome to the presentation here at Planet MicroCap. Good to have you joining. Find some seats. We've got some pens on as well from MediaValet. If you guys would like to grab those, nice pens, little branding for you, little memoir. Anyway, thanks for coming in, and hopefully we can give you some good information about MediaValet here. Helps you have a better understanding of who we are and what's happening. Before we get into it, of course, the standard safe harbor statements apply around forward-looking statements and risks associated with those that will affect whether or not they come true. So as we get into this, I'm just hoping actually we'll get three key messages across. One, that the DAM market itself is hot and it continues to be a good growth market for us. Two, MediaValet's vision is around delivering hot DAM, as we call it, and it's resonating in the market, enabling us to continue to have a consistent and strong growth trend. And two, we're also busy optimizing our operations and progressing quickly towards cash flow positive. So I know those are the three key takeaways for today. I hope everybody gleans from today's presentation. So kicking off with that, just a little bit about the digital asset market itself. If you're not familiar with it, and DAM is really seen as the hub of your digital assets and your digital strategy. It's today in today's world, you got to be digital first, right? And in order to do that, you need a lot of content. You need to be able to do content at scale. If you're going to deliver that, you need to really look after your assets. So DAM becomes more and more critical as we go more and more digital. And that's what we're seeing is, the main secular tailwind that's driving the adoption of DAM is the need to be able to do content at scale in order to be successful today. What started originally as a solution just for images and finished images only for marketing predominantly is where DAM got its beginnings, but it's quickly progressed. It's a very robust management system for these types of content assets. And now it's not just the finished product, it's also work in process type files. Also, it's the raw materials. It's also other file types like video, 3D, etc., audio. So both the types of assets and the use cases for those assets has continued to expand exponentially here. And it's also gone out of marketing, so it really is becoming more of a cross-foundational, cross-organizational type of solution, which we get really excited about. It's as you can imagine, everybody needs access to all of these assets that that convey the messages of the company and help to build the brand and inform your stakeholders. And it applies, equally in finance. I use our digital asset management system internally for the things I do, delivering to the board, managing all of our materials and things, being able to use branded portals to actually deliver decks and things to investors. It's quite, it's fantastic, actually. The search capability on it's amazing. But so it goes well beyond marketing now. And as a result, what we're seeing is about a 13% CAGR expected of going forward over the next 5 years for the market. It's continued to be a strong growth market. Just like everybody right now, things have all obviously been a little tougher out there in terms of longer sales cycles, but we're still seeing great interest in the space and lots of opportunity ahead for us. So, whether or not it reaches a $8 billion plus market in the next 5 years is to be seen, but for now, it's definitely a demand-rich environment and continues to enable us to generate good growth. And how we're doing that is really we're delivering what we believe is what we call our hot DAM vision. And this is the mission that we're on that realizes that, hey, if we're going to win in the market, it needs to be a whole product concept. It isn't just about the technology itself. It's about how you deliver that technology. And our number one goal and what informs our vision here is that we want to be number one in adoption for DAM in the industry. We think if we're number one in adoption, we win. And so this little graphic here is a depiction of that whole product concept. At the center, obviously, is the DAM itself. And, we have to be exceptional at DAM. And indeed, we are. We stand out. We have great scale, architected very intelligently to handle the most complex of situations, but also be flexible enough to do simple situations. So consequently, we have customers from SMB all the way to large enterprise. And we focus in the mid-market. But, the byproduct is that we do get other industries and other market segments as well. Okay, and we can support them quite easily with our DAM. It's got full artificial intelligence capability. It supports organizations being able to collect assets and deliver them to a Gen I solution to actually, augment your creative processes. But AI today is predominantly focused around meta tagging and search and discovery of those assets, making sure you can organize them better, more seamlessly, and make our organizations that work with us more efficient and effective. But if that DAM is going to be, realized, the value is going to be realized, we have to be exceptional at empowering users to understand how to use it. And there are thousands of use cases for DAM. It is amazing just how many unique ways we find out all the time. Customers have figured out additional ways to get value from DAM. And so it's really important that we build the playbooks around that and we understand the use cases our customers are focused upon. So once we deliver on those, we can make sure we unlock the next use case that's closest to their needs. And this is how we'll keep landing and expanding our customers. We have about 100% net retention rate right now. I think we can do better than that. We're focused on doing better than that. Having really good playbooks around how you implement DAM in your environment and how you unlock these use case values, that's going to be key. And the last layer of delivering hot DAM is to make sure that we've got great integrations. And so, it has to integrate into the tech stack to drive the value that is there to be gotten from DAM. So anything from connecting it through into your website, through into sales enablement tools, into your product information management systems, workflow systems, et cetera. We have to be really good at integrating. So we built an excellent application programming interface. We're in the process of now, bringing that, enhancing that system and that capability with full SDKs and things like this. But it's a key mission of ours to both build out our API and build out our partnership ecosystem so that we're tying into the right tools and into the stack easily to enable, again, the value of DAM for a customer. And all those combined, we see as hot DAM. And we're doing it in a way that's, really best-in-class support, innovative, and easy to use is kind of the overall focus that we look to do, okay? So, for example, we just had a customer come to us that was formerly an Adobe customer. They've been in the Adobe world for some time, and in that world, it's a very complex traditional enterprise type deployment world. Okay, they're a full Microsoft shop, and they've got everything you could imagine. Very complex environment. They were able to easily replace AEM, Adobe, with MediaValet. Okay, so our capability can go all the way to the large enterprise and tie into all the tools they need, yet still be easy to use. They were able to stand that up in a fraction of the time that it took them to get Adobe going. Anyway, as a result, we've continued to drive great growth, standing out in the crowd. It's a busy market. We talked about the market growth. About 13%. Our ARR is growing 27%, so we're well outpacing the growth in the market. Again, grabbing additional market share around our DAM vision here. 30% growth in our billings LTM and 34% year-to-date growth in revenue. So definitely, it's working. Little bit on the integration side. We've built a lot of integrations out of the box, as you can see here. Various areas from workflow to over here, workflow with Slack and Wrike and WorkFront, WordPress, Drupal, Sitecore on your content website management side, sales enablement, social media, CI Hub actually enables us to integrate with various creative tools, and down at the bottom here you have a couple of things. We have some Microsoft stuff here as well. We're 100% built on Microsoft platform as a service, Microsoft Azure. This gives us a lot of inherent advantages about being able to be as enterprise as we are, if we architect well within that framework. But we also have our open API that we show at the bottom there to enable customers to integrate completely into their tech stack. And the more integrated we are, obviously, the stickier we are and the more opportunity for expansion. So this is an area we'll continue to build out. So in terms of where we're headed, a big part of what we're working toward, we just launched face recognition here in Q3. We're very excited about that. It's been really well received by our existing customers. I think we had about 25% of our existing customer base, reach out instantly when we launched that and showing great interest. So hopefully we'll get a good attach rate, but also it'll help us to win more in the market. Really cool solution, obviously, to be able to search on faces and organize on faces and things like that. Some organizations don't market this way or don't have assets that work this way. This is incredibly important. Okay, so it really depends. Like TIFF is a customer, they love that, right? Whereas Sonos, they don't care about the faces so much, right? And then in-app notifications was recently launched. This helps our workflow and collaboration at the DAM level, right? Again, more and more of these things will be coming, but both are creating great excitement, both with our customers and our new opportunities. But anyway, a little bit on that. So roadmap ahead, really, there will be more on automation, such as the workflows, and more on AI as well, enabling Gen AI, et cetera, within the DAM. From a go-to-market perspective, we're a direct go-to-market organization. A majority of our business comes through our direct marketing efforts. In fact, yesterday, I'm pretty excited. We just launched our new website. If you have a chance, go check it out. I'm super excited about it. Really, the team's done a great job of being bold and capturing our hot DAM vision, which I think is fantastic, and it comes with a new logo, which is at the bottom here. You don't see the old one, but it's a world of difference. So super excited about that. But our website is our storefront, right? So it is probably the #1 source of leads for us. So getting this updated and fresh has been it's a very exciting piece for our next step of the evolution. Partnerships, I mentioned earlier. Building a tech ecosystem that enables us to not only provide that integrated experience for customers, but also helps us to win new customers and bring new customers our way. I'm hoping we'll see partnerships contribute a larger portion to the business over time here. Ones like Wrike, for example, have been great. We have an integration with them that we did jointly together. And we get a significant amount of our opportunities that actually come today are from that relationship. So we know that if we have good synergistic relationships with partners, that it will drive additional business for us. Microsoft down at the bottom is a great technology partner today, and we're working toward opening them up more as a go-to-market partner. So I think we'll see more on that in the coming year. But it would be great and super exciting if we could actually get them operating more like Wrike has been for us, as an example. Couple of quick customer examples. What you'll see from us is we don't really have any true concentration in any particular vertical. It is really we're selling to the use case need to be able to manage all of these assets. And that applies to every organization. And certain verticals will be hot at certain periods of time. But a couple of examples here in an insurance leader that we just won recently announced. Maybe you don't think of insurance instantly when you think about DAM and digital marketing and digital assets. But for them, with MediaValet being architected as it is, we have best-in-class security in this space. Particularly as we're built on Microsoft Azure platform as a service. For organizations like this, security is critical, right? So, we really stand out instantly in this sector. So we do have some good customers in that area. This was a great win for us. And you can see they're taking the audio video intelligence as well, which is a piece of our AI suite, okay? That indexes all of your videos and things, and you can pinpoint exact places where things happen. And all of that's tracked in the DAM, make it nice and searchable and easily accessible. And they actually paid 3 years up front. Usually when you look at our model, we do 1-year terms predominantly. But, if customers want to pay 3 years in advance, we're okay with that too. we just don't push for it. And in times like this, the reason we don't push for it is, one, we like to be easy to work with. And if our salespeople are pushing all the time for 3 years, that kind of makes it a little bit more of a friction in your sales process. We don't want that, right? But we want it to happen quick and seamlessly and be easy to work with, not pushing some agenda that the customer doesn't want. And so again, if they do want it though, we're going to be easy to work with and work with them to do that. Obviously, it has the benefits, with net retention rates at 100%. We don't need to go after those other years, but it is nice knowing they're done for 3 years and we can really focus on being successful and not worry about year to year. The audio experience leader here, really exciting win. This is the one that we won from Adobe. This organization actually has gone entirely digital. They manufacture audio equipment, studio recording equipment, things like this, and they decided they needed to be, in order to have a cost advantage in the industry, they needed to be 100% digital from the start to the finish. And they did a massive digitization project rolled out in 2021. They went with Adobe to start with, because how could you go wrong with the largest enterprise organization? It was a terrible experience for them. And, they came to us on their 3-year renewal. They're on a 3-year contract cycle, as they are with us, not paid up front, but 3-year contract cycle. And again, audiovisual intelligence. So they're taking our AI suite, Active Directory for integration into their whole Azure system. So it handles all of the security and aspects with respect to their employees. But that was a really exciting win for us. And I think we have our CTO here today, Jean Lozano. But I think Jean spent almost a month figuring out how to bring all of their assets from Adobe over to MediaValet like that for them, and before their contract expired, which was pretty exciting to be able to do that quickly. And by the way, those are two for us. Often we'll announce contracts that are, at least double our average contract value. So our average ARR, annual recurring revenue value, is about $25,000 a year. So obviously these would be to the larger size of our customer examples. And we have I think when you think about concentrations, it said there's no real concentration either in customer nor in verticals, but some of our larger ones would be the higher education sector. It's in that 10-15% range, and the not-for-profit sector, which is also in 10 to 15%. So a couple good verticals for us. On that note, that's what's helping drive our proven track record. Over 500 customers now, which is exciting for us. We just reached that recently, and exciting milestone. Customers are all around the world, but most of our business is in North America, okay, US and Canada, and at that most in the US. But we do have, again, part of our backbone enterprise class capability being built on Microsoft Azure Platform as a Service. We've got great regional coverage. One of our customers states it as, we can go where most can't. And they gave us the example of, even with Dropbox, they couldn't have their people in Singapore accessing the exact same system. They actually had to implement it and duplicate it for Singapore. So with us, it's just once, seamless, up they go, and we have global coverage and data residency guarantees in more places than anybody. So net retention 100%, targeting that 105% range over the next couple of years here. I believe we can get there with the changes we've recently made operationally. And as you can see here, strong ARR, annual recurring revenue, and total billings growth. And for us, obviously, billings is critical. That's the cash in the door. We're on the cusp of cash flow positive operations, so we really watch that closely. The 30% increase in total billings is obviously very meaningful for us. And as you can see, it's been a pretty steady growth, nice and consistent over time. Currently running at 27% on ARR growth, but nice steady growth curve there as you see. A couple highlights, just finished our Q2, announced on August 15th. Again, the growth continues, 34% CAGR here. We had 30% growth in revenue, 34% CAGR on our, gross profit. The gross margins remain strong in that 80 to 82% range. And again, well outpacing the growth of the market. Excuse me, revenue 34% growth. And we've been really focusing on cost optimization as part of our Q2 results. We also announced a strategic restructure. Really excited about that. It helps us to align and focus the team. And little history, I started with MediaValet as CEO in February. So these are some of the changes I'm making. I've been chair for the company since 2015. But the strategic restructure was super exciting for us, enabling us to align the business, really hone focus. I inherited an org chart with 12 direct reports, and now I've got 5. And so nice and clean. Really, it drives alignment, drives ownership, and also enabled us to do a bit of a reduction in force at the same time. So we've gone from around 100 people to around 88 or 90 now. So we're doing this right steps there. Again, that has us, we were already on the cusp of cash positive operations, but this has also put us in great shape to ensure that happens and ensure we're profitable, have a profitability focus in the road ahead. Upside opportunities as well coming from feature and platform launches, large deal wins and partner activations. So those are kind of the main focus areas. We talked a little bit about AI already. And right now an attractive valuation point as well. So which I think you're probably dealing with a lot of those, but in this market. But here's a little snapshot on us. Shares outstanding. You can see the things there. EV to revenue about a 3.1. Lots of inside ownership here. I think my average price is probably right around where we're trading, 3.5 million shares. So definitely we're all invested and excited to be here and driving the business shoulder to shoulder to win with shareholders. So that's the team. Great team, really proud of these folks, and lots of great examples of driving impact and great capability here on the team that'll help us go to the next level. So with that, I think that's the deck. If there's any questions, happy to receive them. Corey. Yeah, great question. So for those that couldn't hear, I'll go around with the mic next time. Corey was asking about whether the pipeline and the opportunities we're winning are rip and replace type opportunities like the audio company I gave you the example of, or is it still greenfield? And yeah, still predominantly greenfield. It's surprising how many organizations of all sizes haven't really gone down the DAM route yet. It is so I think we still have a lot more to go. But yeah, there is getting to be more and more now. It's maturing. The growth was about 19% about 3 years ago. Now it's about 13% in the market, right? So, our growth obviously is still in the 30s, but definitely that part of that is a bit maturing, right? So there is definitely more rip and replace going on now than there was in the past. But still, the lion's share still seems to be greenfield. Thank you. Any other questions? Yeah. Absolutely. Absolutely. So the question was regarding the balance sheet, health of the balance sheet, debt, and path to cash positive and profitability. So yeah, so first of all, from a balance sheet perspective, we do have a $9 million line of credit that with TD. It's prime plus 1.4% and no covenants. Pretty good. It's actually a monthly recurring revenue line, right? So it actually grows with us, and it was $7 million last year. Now it's $9 million. That's been great for us. We have dipped into it a little bit here, and we had I think about $500,000 in it at the quarter end for Q2. So our plan is to use that to get us over the cusp here. Q4, we're expecting to be cash positive. It's our strongest billings quarter. And so we're really confident, especially with the reduction in force and the realignment on the strategic restructure, that we'll be meeting that for sure. Okay, so we'll be able to repay some of that in Q4, and then Q1, Q2 next year, likely kind of break even / slight burn, but our billings are weighted to our second half of the year, so strong cash flow in the second half and cash flow positive for the year as a whole. So we're right there. I think our cash burn this year will be down about 40%, 2/3 of what it was last year. So we're cutting into that, and with the reduction in force, we'll see even more next year, obviously, cash positive. So it's a bit of a focus, and in terms of profitability, because we defer all of our revenue over the 12-month term, it has a bit of a lag. So, usually 6 to 12 months after you hit cash positive, you'll see the EBITDA positive happen, right? But it's kind of foregone at that point, foregone conclusion. That help? Yeah. Yeah. So Corey's questions about the ability to maintain cash positive operations. Yes, absolutely. Once we hit it, we're there. So we don't have any burning desire to go and do a step function increase again. And just rolling back the history, about 2 years ago, we doubled the size of the business to leapfrog ahead. As you normally do, you expand and contract a little. We've just finished that piece. And now it'll be sort of incremental over time, but there's no step increases coming. So, the plan is let's put a bunch of cash in the bank. Yeah. Good question. Yeah. Yeah, no, there is definitely. There's already starting to, so the market itself is pretty fragmented. You mentioned that earlier. There's a lot of competitors, a lot of people start up thinking, hey, we can do this, right? And it actually ends up being quite a complicated, system to deliver. But so it's not as easy as people might think. But there are a fair few competitors, and we're starting to see some consolidation happen in the industry now. So definitely, and there's been acquisitions both in DAM, both between DAM competitors, true consolidation, but there's also been other, marketing stack tools and stuff that have started to buy DAM as well. So, because it touches everybody, it's a hub, right? And so we're definitely seeing a bit more of that. So there's both opportunity there for us to be an acquirer as well as we get we get cash positive and have the opportunity to actually go and execute on some of these. But we've kicked the tires on 4, and we just haven't been in a position to execute yet. So. Good. Thanks, everybody. I appreciate it. Hope that was informative, and here if you have any questions or one-on-ones for tomorrow. Thank you.